Welcome, millionaires and billionaires. As always, I aim to bring you truth, knowledge, and wisdom to assist you in your journey through crypto. Welcome newcomers, welcome new viewers and new subscribers. If you are new to the channel, there's a great project, a new project launching soon, which is the Ghost Ledger crypto wallet. The main utility is the privacy wallet, which hides and conceals your transactions and your the contents in your wallet, so no one can view what's in your wallet and the contents. So if you are new to the channel, I recommend joining the Telegram group, and as well as follow the Twitter account. The link is in the description below, as well as the website here. This is the Telegram, and also follow the Twitter for updates and so you can get early and pre-sale, guys, which is starting soon. So we're gonna jump into the chart, guys. If you haven't caught up on the previous lessons, I do recommend watching them and catching up before viewing this lesson. This lesson is going to be covered. We're going to be covering the indicators, how to read the Bollinger Band, and I've covered previous videos how to read the MACD. The MACD is very self-explanatory. It's very simple, but we'll also cover it a little bit over refresh our memories again. But the main video here today is reading the Bollinger Band indicator, which is one of the most important thing that's going to help you do your trades. And we're going to cover the fib extension and also the fib retracement. Someone did recommend to go over that, cover that more in more depth, so this is what we'll do in this lesson. So I've always tell you guys that every coin moves together. One coin doesn't move against the market. There's only two possible scenario where you might have one coin move against the market, or while the market is either consolidating or moving down, you have one coin pumping. One scenario is if it's a new launch, then it doesn't follow the market, it moves on its own. Second is if a group of people is pumping the coin as a group, and then it will go up. Just to show you that, you know, every coin does move together, we're going to take a look at Shiba. We look at Shiba because you can look at Shiba and you will determine where the entire market will go based on what Shiba is doing, because all crypto moves together. So I'm going to show you an example here. Let's look at BTC here on the 4-hour here. Okay, on a 2-hour, it seems like it's okay, let's look at the 4-hour here. Okay, on the 4-hour, we have Bitcoin is starting to go up, but it haven't made its way above the trend line. So look at this movement here. It went up, hit resistance, and then it dropped, and it's starting to go back up again. Look at the similar pattern with Shiba. Price started to go up. Let's get the brush here. Price started to go up, hit resistance, drop, and then started to go up again. Look at this formation up. It's more of an N formation here on the 4-hour, and you can see the exact same thing with BTC. N formation. I can pull up any coin, it's going to show the exact same movement. So this is why I tell you guys, every coin, when the market is pumping, every coin will follow, every coin will pump, because they all move together. This is one piece of information that people don't have, that, you know, whenever they're making analysis on the market, they look at one particular coin, they don't understand that the entire market moves together. Whichever they can simply just look at one coin, and based on that coin movement, that's where the entire market will go. So this is one thing to keep in mind that the entire market moves together. One coin doesn't move on its own unless, like I've explained to you, the two scenarios. So just as a price prediction here, guys, we did see it hit resistance. Whenever it hit resistance, this is the upper Bollinger Bands, and this is the lower Bollinger Band. The upper band will act as a resistance, and then the lower band will act as a support. So this is to maintain price, to keep price within the bands. So whenever you see price is spiking up and hitting the upper Bollinger Band, it's either going to break it if it has enough strong upward movement, and if you see it's attempting to go up and break the Bollinger Bands and it's resisting, then you can expect price to drop like this. So, and then once it drop, then it's gonna test the support, which is the lower band here. As you can see, this huge drop here, then usually it will come outside of the Bollinger Band, and once you see resistance or support, it's going to test support, and if it has enough support, it's going to reverse back in the other direction. So as you can see here on the 4 hour, Shiba is hitting resistance. It's hitting resistance at the moving average. The middle line is the moving average, or the trend line. You can call it the trend line or the moving average. Usually when price is coming up toward the trend line or the moving average, if it's resisting, because this trend line is a support, and also it's a support at the same time. It's also a resistance. So if price is coming up to it, as you can see right here, you see it tried to come up once. Here, let's get this brush here. You see price tried to come up once here, it rejected. Then it tried to come up again, second time it rejected, and then a third time also rejected, a fourth time also rejected, and a fifth time it also rejected. So usually after the third time, if price rejects, then what we can expect is price to come below here and test the next support area, which should be around these areas for Shiba, which is around the 40106 to the 40108. Then we can expect price to come around these areas before moving back up again and retesting the trend line or the moving average, because at this point it's hitting resistance. There's too much resistance here, so the only possible way for it to go is down. So this is how you make your prediction. So if you were to short Shiba, for those that short Shiba, like I said, I'm going to teach you guys, you don't need to short anything when it comes to the market. You either take a long trade. I don't recommend trading on leverage yet. So what we're going to do is trade on spots, where it gives you peace of mind. You just trade and let your trade ride, and a few days later you can just look at your trade and you can determine. We're going to trade on starting on the 4 hour. The minimum time frame to trade is from the 1 hour time frame through the monthly time frame. I don't really recommend looking at the 15 minutes. The 15 minutes, the 5 minutes, the lower, and then the lower time frame is your entry positions, is where you enter the trade. So for me, I enter the trade on the 1 minute time frame because that's sniper entry. So I've explained earlier, if you enter, for example, if you enter a trade on the 4 hour chart here, you can enter here, the price can come all the way back down to the 4011, and then go to the direction it intended to go. But you can enter at precise points, which is where you will be using the 1 minute time frame, the 5 minute time frame to enter in precise entries. So the trend line here is to keep in mind whenever price is coming up to it. If it's rejecting, then get out of the trade on a higher time frame. If it's rejecting the trend line, get out and wait for price to come back down, and then enter another long again. In the bull run, most of the time you don't need to trade on a lower time frames anyway, because the market is going to be very volatile. It's going to be moving very quickly, and we are in the bull run. Then once if price has strong movement, upward movement, for example, let's look at for example, when it did break above the trend line here, all the way down here, that would be here when it did, no, it broke around, I would say, these are too choppy, so we'll use a lower time frame here. Okay, this is a perfect example here. As you can see, this a strong movement. A price was trending on the trend line. Usually when it's trending on the trend line, that means it's trending on the support areas. Only if it's trending below it, then that means most likely price will go below it. So right now we can use this as an example where price was trending below it. Price came down, then it consolidated a little bit, then price went above the moving average or the trend line. So when it moves above the moving average, then you can expect price to continue upward, which it did. It spike up here, and then it came back down, and still it ended up trending sideways on the trend line. So let's go back to the 4 hour here. Then the lower band will, like I said before, will act as a support. If price breaks below the band, let's say for example, price did attempt to break below it, but if it quickly goes back into the Bollinger Band, then it's a bullish movement. But if price is outside of the Bollinger Bands, or if it breaks below the band and it continues to go down, then it will continue to drop until it hits the next support areas. For example, a bullish movement would be on the Bollinger Band, would be when price is hugging the Bollinger Bands. For example here, when price is moving upward with the Bollinger Band, then it's very, very bullish. And as soon as price moves very quickly outside of the Bollinger Bands, then you will expect a pullback around, such as here. When price is outside of the band, most likely it's going to come back in reverse. So this is where you would also take your profits as well. So let's look at things on a 3-day chart here, on a longer time frame, see where the market, like I said before, we are still somehow expecting a retracement on the 3-day, which hasn't happened yet. So I wouldn't pay attention to the minor movement that's happening on a lower time frame, like such as the 1 hour, the 15 minutes, because always look at higher time frame to look at the bigger picture. Like I said before, here look at the MACD, guys. Buying pressure has been decreased. We'll go briefly go over the MACD, how to read it right quick. So okay, how to read the MACD is very simple, guys. It comes with this green and a red line. So whenever the green crosses above the red, that means it's bullish. You can enter your trade right here and correspond it with when price is green also on the MACD, when there's a lot of when buying pressure has begun. So you would enter, and then you would, okay, let's zoom in a little bit. Okay, so you would enter your trade when the line crosses, and also when you would also correspond it with when there's buying pressure has begun, whenever you see these green bars, and then you would get out as soon as you see the line crosses again here, and also when you see buying pressure has been decreased. So right now we are seeing, as you can see, it did come back down when those indicators did show. So this is where we had this huge run up with SHIB, and then price, like I said, just correlate the MACD with the chart. So this is where right here you would have gotten out, which is around these areas, and then look where price came all the way back down here. So right now we are having another scenario here where we're experiencing low buying pressure on the 3-day. Here you can see selling pressure is starting to decrease here, and then the line hasn't crossed yet, but you don't need to, this is just another indicator. The main thing you need to worry about is the MACD, which is just here itself, just these bars, red and green bars. So you can see selling pressure here again. So we are here, so most likely price is going to come back down on the 3-day, and we can see that as well, where you can see where if price is hitting the upper Bollinger Bands and it's resisting. So let's see how many times it resisted. Okay, we've had one attempt here. Let's get the brush. We've had one attempt here, which is this candle. Okay, let's make this cleaner, which is this candle here. And then we had a second attempt, which is here. Price got rejected also. We have a third one. After the third one, you can already predict that we're going down. So a third one and a fourth one, and then now we are having a fifth one. So price is coming down very hard and very quickly within the next few days, guys. Expect a huge correction to happen, because just look at Shiba and you will predict the entire market. Bitcoin will also do the same. So I expect Shiba. Okay, so what we're gonna do is we're going to plug in. Now I'm gonna show you how to read the fib extension and the fib retracement to predict where the price will come down to on the 3-day chart. Okay, so what we're gonna do is we're gonna plug in the fib extension. Like I said before, I've stated this in the VC. It's all the what it does. It's in the name. The definition is in the name. The fib extension, it just tells you where price will extend to before doing a correction. And then the fib retracement, is you plug it and then it tells you where price will retrace to or come back down to before going back up. So we're gonna plug in the fib retracement here. So what you do is, let's see. Okay, the fib retracement, what you're gonna do is, okay, let me explain it as I do it, helps so you guys better understand it. The fib retracement is you're going to, let's see, make sure I'm doing this thing right here. Yeah, okay. The fib retracement is you have to start at the top where price stopped at and bring, let's erase it, and bring the fib all the way down here. Okay, price stopped here. Okay, so we can expect price to come down at least 50%. Like I said, there's always this scenario where, you know, those who control the market, sometimes we might not even have a correction. They can just continuously pump the market. Let's also keep that in mind as well, because there's people that controls the market. If they don't want price to correct, the price will not correct. Sometimes it will continue to skyrocket, or if they don't want the price to move up, they can continue to drop the price down. But eventually they won't be able to control the market as much. The more people that comes into crypto, the less they will be able to manipulate the market. So we can expect price to come back into the 0.05 to 0.03 areas, which is, we call it the golden pocket here, which is these areas. So I've showed you in a earlier on a lower time frame that we will expect price to come into the 40108 to the 40106 areas, which is this area here. So I would expect price to retrace back into these areas and then continue upward. This is where we're gonna have these huge movements, guys. After the first retracement on the 3-day, this is when crypto really move, guys. As you can see, you've seen the previous movement, the first pump in the bull run. That's not really that's a good pump, but the real pump doesn't start after the retracement, which we should be expecting shortly on the 3-day. And this is how you read the fib extension. You tap it, you tap price at the top, and then you bring it down where it began, and then you would expect price to come down at least 50%, or in between the 0.5. Okay, let's see this, make sure I'm doing this right. Okay, now we're gonna plug in the fib extension. Let's say, for example, if price did not correct, let's erase this. Okay, let's say if price doesn't correct, and where we can expect the next price movement to go, what you do to read the fib extension, which it just indicates to you where price will go before crypto comes back crashing down. So it just tells you where to take profits. So what you do is you tap where price begin at the very bottom, where price started to go up here. Okay, this is not cooperating. Okay, you click it and then you drag it where price stopped. Click the bottom, drag it where price stopped here, and then you bring it back down to where the previous retracement, where price did correct to, slightly correct to, which is the last drop, the last candle where the last candle came down to. So usually it's going to be a red candle, which is indicate to a slight correction happen, and then click it, and then it's going to tell you where price is going to come to before Shiba come back down. So you will know exactly where to take your profits, and then just wait for the price to come back down, and then you buy it back again, and then this is how you continue to triple, even accumulate so many coins. So we will expect price, if price doesn't correct and continues, we will expect Shiba to get into the 40220 areas, to the from 4019 to 4020 areas, which usually is the blue box, or from this point here, from the 1 to the 1.6 here. This is where you will know where it's not. Okay, cooperate. Okay, let's exit out of here. Have too many things running. So this is your profit taking areas. Always remember that this is the blue box here. So as soon as price come into this blue box, sometimes it will try to attempt to break beyond it, but that's if there's a lot of volume. But usually a safe area is as soon as price get into, sometimes you don't even have to wait until it gets into the blue box. You can just get out around these areas, but you can always see if on a lower time frame, look at the chart to see if there's resistance. If there's resistance, then you can guarantee price is coming back down. So once price get into these area, into this blue box from the 1 to the 1.6, usually I wait until this area. I would say after about a quarter, when price get above, at least above a quarter into the blue box, I start to look at where to take profits. And then once you take profits, we'll expect price to come back down into these areas, at least 50% correction. And then you buy back again, guys. So this is how you read the fib extension. The fib extension is one of the most vital tools you will end up using most often, because it is the only tool that guarantees you where price will get to before it corrects. The Bollinger Band is not going to tell you where price is going. The Bollinger Band only tells you what price is doing at the present moment, if it's going to go up, if it's going to come back down. And also the trend line does the same thing. If there's resistance, it's going to, if it's trying to come above the trend line, there's resistance, it's going to come back down. If it's going down and if there's support on the trend line, then expect price to continue upward. So the most important indicator you will ever need is you don't even need the fib retracement, because most of the time if the market crashes, if it come back down, eventually it's gonna go back up. So just 20% correction, you can just get back in and just wait. Eventually it's going to continue upward. The most important indicator I want you guys to remember is the fib extension. This is the most valuable piece of indicator you will ever need. Once you plug it, it'll tell you exactly when to take profits. It'll tell you where price will go before the price come back crashing down. For example, you can plug it on Bitcoin on the weekly time frame, or even Shiba on the weekly time frame is almost the same as the 3 daily time frame, and it will tell you exactly where price will go before correcting. So we'll give you guys an example. For example, let's say those that invested in Shiba a while back, we're gonna look at the 3-day chart, and what we're gonna do is we're gonna plug the indicator in to see how accurate it was in predicting the price movements. So what we're gonna do is we're gonna use this first movement here. What we're gonna do is we're gonna plug in the fib extension where price begin here, and then where price stopped, and then where price came back down to. I would say it's tough because one of the candles came all the way back down here, so we have to go with where the last candle stopped. Yeah, as you can see, price did break. Sometimes when it breaks above the blue line, that means that's what you call the blow off top, where everyone is getting in and price will spike above it and will come right back down. But if you would have got out of the blue box around this area, you would have been fine, and then you would have just wait until price come back around here. You probably would have got in back here, but you would have put your indicators in, and as soon as you see price is rejecting again, you would have gotten out and just wait until price come all the way back down here and get back in again. So let's see if we can zoom in and show you a better picture. Okay, let's redo this so you can see better, because this is very important. The fib extension, this is a priceless indicator anyway, because this is the only really indicator you really need when it comes to knowing when to take profits. Let's erase this. Okay, I guess that doesn't really matter, but you could, either way you put it, price did go above the 1.6, so that's a blow off top here. Okay, so let's say let's do it again. All you need to do is tap where price started and where price stopped and where it retraced back down to. I would say here. Technically it's here, but rule of thumb is always go with the last red candle here. Like I said, some coins, if there's high volatility, it will go above the blue line into the red box, but it won't go beyond that. But you would have known to take profits because you would have seen. This is why I say never get in a project where you see these huge green candles like this. When you see these huge green candles, don't chase them, because most likely price is coming right back down. Always get in after a retracement. If price is continuously going up, just wait until there's a retracement first, and then you get back in. These are the price movement we're gonna see within the next week or so. These weekly candles, because price did retrace. Price, look where we are right now with SHIB. That's just with in general crypto, as in general. So price price did come above the trend line, then it attempt to test it, and then it's rejecting. So we're gonna have a retracement, and after the retracement, this is when the real movement happens, and then we will expect this huge green candle here, which should be spike around here, and then we'll have the next green candle here. This is where we see the real bull run price movement, price actions. So hopefully you guys understand how to plug in the fib extension and know how to use it. The next video we'll do is a live to see, you know, whichever questions you guys have, and then we can address those questions. And we can even, let's go to the lower time frame just to retest how accurate this indicator is. So let's go to the 12-hour. 12-hour is pretty much the same thing here. Okay, this is the monthly chart here. You can see Shiba is just getting started, guys. On the monthly, we did break above the trend line, which is a good sign. Then once it break above the trend line, it's going to retest. Once it retests, then if it doesn't break below it again, for example here, price did attempt to go up. It didn't break above the trend. It attempt to break it, but if price doesn't close above the trend line, then expect it to continue to go to the downside. For example, it didn't close above it fully, then it went back down. But here we do have the scenario where price did. This is just confirming the bull run for you guys. Okay, we gotta end this soon, guys, because the video is getting a little bit long. So you see price did close above the moving average. So what it's gonna do is going to retest it within the next few days on a 3-day chart. And once it retests, if it doesn't break below the support, then we will expect these movements within the next, these are just 1 week candles. Imagine the first pump, the first previous pump, look how small these candles are compared to these candles. These are the real bull run candles. So this is what we are about to experience, guys. And we can actually plug in, well, there's not enough data to plug in on a weekly time frame to determine where price will go, but price will at least get above this on the, let's say 1, 2, 3, 4. So that's 4 weeks. So that's about a month worth of movement here. So the next, like I said, February is going to be a huge month for the crypto market, especially for SHIB. So if we zoom out, where we can expect price to go in February, just in February, is, I would say price will pump around here and get into the 3015 areas before coming back down. This is where we're gonna have the next pump is always bigger than the previous pump. So prepare yourself, guys, and wait for the correction. And then we are about, like I said, we are in the bull run. The confirmations are already there. The first pump is also the confirmation. Once it retraces on a 3-day chart and it doesn't break support, guys, then we are in for some very big volatile movements to the upside. Like I said, if you are not in the telegrams, do join the telegram. The links are in the description below, where we have often VCs where we talk about crypto, learn about crypto, and also learn about the next big opportunity in crypto, so you don't miss out, guys. I'll see you in the telegram. Peace.